New York Stock Exchange. NIO failed to continue its momentum into the weekend as the Chinese EV maker closed the week below the $40 price level. On Friday, shares of NIO fell by 3.38% and closed the trading session at $39.41. Today, we'll give you NIO stock analysis. Number 10, key drivers, NIO stock price forecast 2021 and 2022. The electric vehicle market is relatively young and companies within it still have to overcome multiple hurdles to reach a higher degree of maturity. For NIO, there are multiple variables that could affect the performance of the business in the following 2 to 3 years, and here is a summary of the most important ones. Subsidies from the Chinese government. Customers who buy NIO's vehicles are entitled to receive a subsidy from the Chinese government. This subsidy has been progressively reduced in the past few years, and further reduction could affect the affordability of NIO's products for Chinese clients. Changes in tariffs in the United States and China. The 2008-2009 trade war between the United States and China highlighted the risk that companies like NIO could face if the two countries decide to adopt policies that affect the imports and exports made between them. In this regard, the reduction of tariffs in China for imported foreign electric vehicles or an increase in the tariffs imposed by the U.S. government on imported electric vehicles from China could dramatically affect NIO's sales. Auto sales in China have been declining. In 2020, NIO highlighted that China's total car sales dropped by 6.8%, and this could affect the demand for the company's vehicles moving forward, despite the positive momentum that the premium segment of the market has experienced lately. Rising raw material costs. The cost of many of the materials and components required to manufacture NIO's vehicles has been going up, including that of aluminum, steel, lithium, and nickel. If the price of these critical supplies remain elevated, the profitability of NIO will likely suffer. Political and regulatory risks. The latest hostile measures taken by the Chinese government towards companies within the education and technology sector could be a sign of the times, as they may be signaling a shift in the government's attitude towards big corporations in the nation. In this regard, NIO is exposed and could be dramatically affected by changes in the country's regulations that may affect its ability to raise capital from foreign investors or expand its operations to other countries. Number 9. What happened? After a muted start to the week, electric vehicle stock NIO popped 4% as investors tried to look beyond the dismal headlines that hit the stock momentarily on Monday and weighed in on the long-term prospects of the popular EV manufacturer. Investors in NIO were taken by surprise Monday when the China-based EV manufacturer reported a sharp decline in its delivery numbers for October, even as arch rivals continued to race ahead. XPeng's New York Stock Exchange XPEV October deliveries, for example, more than tripled to 10,138 vehicles. Li Auto's NASDAQ Li October deliveries more than doubled to 7,649 vehicles. In sharp contrast, NIO delivered only 3,667 vehicles, down 27.5% year over year and a staggering 65% sequentially. NIO blamed restructuring and upgrades of manufacturing lines and the preparation of new products introduced from September 28 to October 15, as well as certain supply chain volatilities for the drop in sales. Here's what's happening today. Investors are looking past one dull month, considering it an outlier and not a true reflection of NIO's prospects. While the drop in its deliveries was disappointing, the reason behind the drop was not that concerning. Number 8. Now what? To be fair, it appears rivals are navigating the ongoing global semiconductor chip shortage constraints better than NIO. Investors will want to stay updated about how well NIO is handling the chip shortage when NIO releases its third quarter earnings on November 9th after market close. NIO is expected to report strong numbers, with analysts projecting lower losses on more than twofold growth in revenue. NIO, though, last projected its quarter 3 sales to be up between 88.4% and 104.8%. and revenue to grow between 96.9% and 112.8% year over year. Keep those numbers in mind and mark your calendars, as November 9 will be a crucial day for investors betting on what I believe could be one of the hottest EV stocks to own for the next decade. Number 7, fundamental analysis. On key earnings and other fundamental parameters, NIO is lagging. Although it is young and is growing at remarkable speed, but is still looking to make sustainable profit. NIO net income is always negative year over year, although profit margin is increasing in the current years. Although the revenue kept on increasing every year, but with increasing cost of goods and stiff competition, it is not converted into net income. Number 6, technical analysis. NIO is down by over 40% from January high, but the stock is back over 10-week moving average, but remains below 40-week line. The relative strength line for NIO is lagging. It rallied for most part of 2020, but now it is not able to outperform S&P 500. Share has not so good IBD composite rating of 46 out of 99, which means that it has outperformed only 44% shares in the past year. Number 5, China regulatory attitude, a cause for concern. NIO business model largely depends on help by Chinese government and is evident from the fact that NIO finalized $1 billion loan with the local authorities in the city of Hefei. It is a joint venture to construct a new unit. NIO China and state-owned companies have agreed to contribute $1 billion, and NIO has committed to invest $600 million. Chinese government is regularly tightening regulations for the domestic companies listed in United States, and NIO has already filed for listing in Hong Kong. Number 4, NIO stock prediction and forecast. Investors are waiting for third quarter results and news for new vehicle announcement. NIO ET7 will be launched in Germany in 2022, and deliveries will begin by mid-November. Investors keenly watch NIO Annual Day for company's newest product and technology launch. It will take place on December 18th this year in Suzhou. Investors will take positive clues from the product launch at the event, and it may lead to fresh buying in the stock. Number 3, long-term outlook. Although stock has given handsome return in last 1 year, around 42%, but investors are still not feeling confident about the stock, fearing potential regulatory activity and supply chain disruptions. Investors are also concerned about U.S. Central Bank will raise the interest rate, and so they are inclined to move their money from equity to bond market. Number 2, NIO earnings forecast 2021 through 2023. NIO's forecast annual earnings growth rate is not forecast to beat the U.S. auto manufacturers industry average forecast earnings growth rate of 13.25%. And while it is not forecast to beat the U.S. market's average forecast earnings growth rate of 16.46%. NIO's earnings in 2021 is negative $1,267,645,679. Number 1, NIO stock prediction, final take. From fundamental perspective, stock condition is improving after debt and liquidity fears drag down the share. Company has bright prospects with a number of new launch lined up and is set to make a mark in the European market. But EV wars are heating up in the near future, and shortage of clip supply could be headwind for the company. Do let us know in the comments if you are interested in buying NIO stock. Please subscribe to the Stock Advisor. Thanks for watching.